Hey, Steve Jolly, the Home Buying Skills Channel. Today's show, we're going to talk about, should you get an FHA loan and what are the new requirements for 2023? You ready to get started? Let's get to business. So today I want to cover this. The new loan requirements for FHA for 2023, common questions that you may have about FHA loans, additional costs that you have with FHA loans, some hidden problems that there are with FHA loans, and what else you might consider besides an FHA loan. Now, you could likely buy more home with an FHA loan, but there's going to be a catch, and we're going to get to that before the end of this video. Here's why FHA loans are so popular. Because you can still qualify for a loan even if you have a low down payment, a low credit score, and a high debt-to-income ratio. Now let's talk about the new loan requirements for 2023. Just know that they're not only designed for people with low credit scores and with low down payment. Some of the new requirements revolve around the credit score. For example, with a credit score as low as 580, you can still qualify for a 3.5% down payment. And you can also qualify with a 10% down payment and a credit score as low as 500. FHA also allows you to go to a 57% debt-to-income ratio. If you don't know exactly what that means, talk to a lender and they'll tell you how to calculate it. But it's basically an accumulation of all of your monthly debt expenses compared to your monthly income expenses. And that debt shouldn't exceed 57% of your overall income. And in my opinion, 57% is a little extreme. I'm not recommending that you go that high. I'm just providing that information to you. Now, if you go to a local bank and you try to get a FHA loan with a 500 credit score, they may deny you and say you don't have a high enough credit score. And why is that? Well, banks can write overlays or additional requirements on top of the FHA requirements to protect themselves in case your loan defaults. This is why it's a good idea to shop around when you're looking for a mortgage. Maybe even talk to a mortgage broker that represents more than one bank so you can find one that doesn't have an additional overlay or additional requirements on top of what the FHA already requires. Here's something else about these new FHA loans. Every one of them is going to require mortgage insurance premium. That's an additional cost, an additional insurance that you have to pay on top of your mortgage each and every month. And not only is it a monthly expense, but there's also an initial mortgage insurance premium when you first buy the home. So you pay this initially and ongoing each and every month. And that's why if you plan to put 20% down or more, you're likely better to use some other loan product than the FHA. Here's something else that's unique about the FHA loan. You can buy a 4-unit property, live in one of the units, and rent out the other 3 units and still put down 3.5%. And when you buy multiple units, the loan limits increase. Now, the max loan limits are going to vary by location, and some of that depends on how expensive it is to live in your area. So if you have any questions, reach out to me and I'll point you in the right direction. So for FHA loan, you need 2 years of either job history or self-employed history to qualify for this type of loan. So keep that in mind before you apply. And one thing that most people don't realize about FHA loans, FHA only requires you to occupy the property right after you purchase it. And later on, if you decide to rent out the property, you can do that and not have to refinance your FHA loan. So let's talk about some of those additional costs. Mortgage insurance premium is one of the biggest costs with FHA compared to other loan types. And that's because you have an upfront premium and then you have an ongoing premium each and every month that's on top of your mortgage, on top of your interest, on top of your taxes. And this mortgage insurance premium never falls off your loan unless you put 10% down. And then even at that point, you have to wait 11 years. So most lenders with a conventional loan will remove your mortgage insurance premium once you hit 20% equity in the home. That's not going to happen with FHA. And that's why if you have a significant down payment, another loan type might be better for you. So when should you start the loan approval process? So my suggestion is to start as early as possible. So getting things lined up early, getting ahead of problems will make this process easy and less stressful for you. Another thing you want to know about FHA loans is closing costs are likely going to be higher with this type of loan. Now let's talk about some of the problems with FHA loans. And the first one is that the problem has to be FHA approved. So not every condominium is an approved FHA association. So you need to find out if the condo that you want to purchase is approved before you even start down that path. And on a single family home, you have to go through a special appraisal process for an FHA loan. So make sure you're working with a lender and a realtor that understand your needs and that know how to work FHA loans. And remember, you may need to look for a bank or a mortgage broker that doesn't have additional overlays on top of your loans to get the best rate. Here's something to think about with FHA loans that you need to keep in mind, and it's not really fair. Many times, sellers will have a preference for a loan that's not FHA, the same way they would have a preference for a cash offer. They see that as less risky. And here's why they say there's less risk in it. For one, the FHA appraisal can require certain repairs to be made on the property, even if the buyer didn't request it. The sellers perceive that it's more likely to take longer for an FHA loan to close, and that it may not even close at all. And that's one of the reasons why they see risk in an FHA loan. So besides an FHA loan, what else might you consider? One thing to look at is a conventional loan with some special financing arrangements attached to it. For example, they have some conventional loans with very low down payment requirements and no mortgage insurance premium. There are also first-time homeowner programs for conventional loans and other programs that you might not even be aware of that you need to consider too. If you're looking at new construction, some builders will have special financing incentives that you need to take advantage of, and they may help you get into the home of your dreams. And don't forget, most conventional loan programs allow you to remove your mortgage insurance premium when you hit that 20% equity mark. Thank you for watching this video on buying a home. If you liked it, hit the like button so we'll know that you enjoyed it. If you have any questions, leave them in the comment section below, and I'll be sure to answer every one. And don't forget to subscribe and hit the bell so you never miss an episode. Take care and have a great day.